The number on your screen is $47.16. That's your entire trading account. You've been staring at a chart for 2 hours, watching a tiny green candle crawl upward, hoping that this trade might finally be the one that proves you were right, the one that proves you actually understand this market. Your coffee is cold. Your room is quiet except for the faint hum of your laptop fan, and every tiny movement on that chart feels enormous. Because when your account is small, every dollar feels like a victory or a failure. This is where almost every trader begins. But here's the brutal truth most trading videos never tell you. Most people never make it past this level. Not because the market is impossible, but because the market exposes something most people aren't ready to face: their own psychology. And if you follow the journey of traders who actually survive the markets, you'll notice something interesting. They all go through 4 very distinct levels. Each one changes how they think about money, risk, and the market itself. And by the final level, trading stops being about money entirely. At level 1, everything feels exciting. You've just opened your first brokerage account. Maybe it's on Robinhood, E-Trade, or Charles Schwab. You deposit a small amount, maybe $50, maybe $200, maybe $500. It doesn't matter. What matters is that it's your first step into a world that suddenly feels full of possibility. The trading interface feels overwhelming. Candlestick charts move constantly. Numbers flash red and green. Your portfolio balance changes by a few cents every few seconds. You sit at your desk late at night watching the chart move up and down. And somehow, it feels thrilling. Your first trade might be something simple. Maybe Apple, maybe Tesla, maybe some random stock trending on social media. You click buy. And just like that, you're in the market. For the first time in your life, your money is directly connected to a global financial system, and suddenly every movement matters. If the stock rises 2%, you feel like a genius. If it drops 3%, your stomach tightens. You start searching everywhere for answers. You watch YouTube videos. You scroll through Reddit. You read Twitter threads about the next big stock. One night you log into your account, and you see something incredible. Your trade is up $6. $6. Logically, it's almost nothing, but emotionally, it feels huge. Because for the first time, you've made money from the market. And in that moment, something clicks. You realize this isn't just about money. It's about curiosity, timing, understanding patterns. But the market has a way of humbling beginners very quickly. Soon you make your first mistake. You buy a stock because someone online says it's going to the moon. The next day, it drops 12%. You panic. You sell. 2 days later, the stock goes back up. And just like that, the market teaches you its first lesson. Emotion is expensive. Over the next few months, you make dozens of small mistakes. Buying too late, selling too early, chasing hype, ignoring risk. But every mistake plants a small seed of experience. Slowly, the charts begin to make more sense. You begin to notice patterns. You start to understand that markets move not just because of numbers, but because of human behavior. By the end of level 1, something important has changed. You're no longer just curious. You're becoming obsessed. The difference feels like years. Your chart no longer looks like a confusing jungle of candles. Now it feels like a map you believe you can read. Your small account has grown, maybe through skill, maybe through luck, maybe through a mix of both. But in trading, growth always feels like validation. Your balance is now somewhere around $3,000, $5,000, maybe even $10,000. Not enough to retire, but enough to make you feel like you're starting to understand the game. You've upgraded everything. You're using indicators. You're watching RSI. You're plotting support and resistance. You're drawing trend lines like an artist sketching on a blank canvas. Every setup feels like a puzzle piece that you're finally learning how to place. You start waking up earlier. You check pre-market volume. You read news, even though half the time you're not sure how it affects price. But it feels good. It feels professional. Then it happens. Your first big win. A perfectly timed swing trade that bags $300, then $400, maybe $600. And for the first time, you feel something dangerous. Not excitement, not pride, but certainty. A voice inside you whispers, "I'm good at this. I really get it now." Confidence is great, but in trading, confidence has a thin line. And on the other side of that line is delusion. People begin noticing something different about you. You talk about charts more. You explain patterns to friends who don't even trade. Someone asks what stocks to buy. You try not to smile, but deep down, you like it. You're becoming the market guy in your circle. And inside your head, a subtle shift happens. You used to fear the market. Now you feel like you can outsmart it. One night you see a setup that looks perfect, a clean breakout, volume increasing. Indicators aligned like planets in a rare cosmic pattern. You go in heavy, heavier than you should. But it feels right. You sleep with confidence. You even imagine checking your phone in the morning and seeing green. But the market doesn't care about your prediction. You wake up and see a giant red candle. Gap down, bad earnings, a sudden shift in market sentiment. Your position, down 20%. Your account, bleeding. Your reaction, denial. You refresh the screen again and again, as if the numbers might magically change. A few minutes later, the loss grows. You freeze. Everything you built over months gets wiped out in a single bad trade. This is level 2's trap. You thought the market was a puzzle, but the market is a mirror, showing you your own impatience, greed, and overconfidence. After the loss, your confidence collapses. Your hands shake slightly. You start questioning yourself. Was this luck all along? Am I even good at this? And then the worst thought appears. I need to make it back. Revenge trading. Every trader meets this demon. You enter another trade too early. Exit too late. Your chart becomes a battlefield of emotional decisions. Eventually, the chaos forces you to stop. You sit back, exhausted, frustrated, humbled. And this is where the real level 2 transformation begins. You open a notebook. You start journaling, not profits, not losses, but reasons. Why you entered, why you exited, what emotion you felt, what mistake repeated. Slowly, patterns appear, not in the market, but in yourself. You realize something brutally honest. Trading isn't about predicting price. It's about controlling behavior. And that's when your mindset shifts from, I need to win, to, I need a system. In level 2, you learn the hardest lesson of all. Confidence must come from discipline, not luck. Only then do you begin stepping toward the next level. Reaching level 3 isn't about having a huge account. It's about having a stable mind. Maybe your account is now $50,000, $100,000, or more. But the money isn't what makes you advanced. It's the calmness. Your relationship with the market has changed. The noise that once overwhelmed you no longer shakes you. Red candles don't scare you. Green candles don't excite you. You've become neutral, and neutrality is the beginning of mastery. At this level, your charts look cleaner. No more 15 indicators stacked like a Christmas tree. You rely on a few powerful tools and deep experience. You size positions deliberately. You know exactly how much you're willing to lose before you enter a trade. If the setup isn't perfect, you don't enter. Not because of fear, but because discipline has replaced impulse. You wait, a lot. Most days you watch the market and do absolutely nothing, and you're perfectly fine with that. Because you now understand something beginners never grasp. Not trading is also a trading strategy. You start paying attention to things other traders ignore. Macroeconomic trends, interest rate expectations, liquidity cycles, institutional positioning, volatility regimes, option flows, market sentiment models. Instead of reacting to news, you anticipate how liquidity will move. You begin to see how the entire system breathes, expanding and contracting like a living organism. When the Federal Reserve speaks, you listen. When inflation reports release, you pay attention. When global markets shift, you connect the dots. You're no longer trading individual candles. You're trading the story of the market. Your emotional patterns also change. You don't celebrate wins loudly. You don't panic during losses. Your reactions flatten because your system protects you. At level 3, you treat trading like a business. You track metrics. You monitor risk exposure. You protect capital first, profit second. You even begin developing personal rules. Never trade during low liquidity chop. Avoid setups that don't fit your plan. Don't touch the market after a big win or big loss. Let trades come to you. Never try to be right. Only try to follow your edge. You become patient, precise, detached. And that's when you finally understand the truth. Professional trading is boring, and that's why it works. You're no longer chasing excitement. You're chasing consistency. You've become someone the previous version of you wouldn't recognize. By the end of level 3, you realize it was never about predicting the market. It was always about controlling yourself. By level 4, the perspective shifts completely. Now the focus isn't just trading. It's understanding entire systems. Traders think about sectors instead of single stocks. They analyze long-term trends shaping the economy, artificial intelligence, energy transitions, global supply chains, institutional money flows. Trading becomes part of a much larger strategic game. But even at this level, the market remains unpredictable. Unexpected events can move markets dramatically. Even the most sophisticated strategies can fail, because the market is bigger than any individual participant. Final realization. From a $50 trade to managing six-figure portfolios, every trader's journey follows a similar path: curiosity, confidence, discipline, perspective. But the brutal truth is that most traders never reach the higher levels, not because they lack intelligence, but because they underestimate the psychological challenge. The market constantly tests patience. It punishes greed. It exposes fear. And the traders who truly succeed are the ones who learn to understand human behavior, including their own. Because in the end, the most important battle in trading isn't happening on the chart, it's happening inside the trader.